Jay's Corner. It is February 16th. Short as I possibly can manage under a flurry of different news items that we want to discuss and your money. I realize that people want to politicize everything. This is not the location for that. I'm not here to settle what is fair. I am here to help you understand how financial products work, how events may affect you and your everyday lives. That can be for something very small. That can be because the issue takes overall importance. It's going to affect many. Politics is part of it. I'm not here to change the political outcomes. If you're interpreting my message to be that, to be a politically twisted one, politically a partisan message, that's a you issue. That's not me. Okay, that's because you are hearing what you want to hear, not because that is what I'm intending. Absolutely not. I'm not here to adjudicate fair, I promise. So I'm a financial planner, certified financial planner. I'm also education fellow at the Alliance for Lifetime Income. It's a nonprofit used to educate advisors and the public on the function of annuities. In addition to that, I am the author of the published book, Maximize Your Medicare. The 24-25 edition is available anywhere you can buy a book. It is a published book. It's also available in most of the largest library systems throughout the country. Okay. Directly to it here. Let's just get directly to the agenda here. So, D.O.G.E has arrived. The first segment here is D.O.G.E has arrived. The Department of Government Efficiency has arrived, and sweeping changes and a flurry of executive orders are out in the public domain. Most notably for me is the fact that the number of government employees, both by a voluntary, retirement, and most recently, just the other day, Friday night, I want to say that temporary employees, ones who are on their probationary period, have basically been all terminated. Now, again, I'm a financial person. I'm not an attorney. So as a result, you'll want to check and keep up to date on the legal, machinations of whether or not, these executive orders, etc., are in fact going to be actually executed. It seems that the 70,000 who have accepted the voluntary early retirement, if you will, right, seems to be going forward. I'm not under any statement about what your legal rights are. You should get legal counsel if you are uncertain. Okay. What I am here to address, though, is the uncertainty that is definitely going to result if you become unemployed. It just so happens that D.O.G.E and federal employees, it's the large group health insurance, buyer in the country. That said, it's not the only. For example, large companies across the nation, you can look up on Google white collar recession. Is some of that AI assisted? I have no doubt. Is some of that just due to other competitive or economic, reasons? Certainly that is going to be the case. These are structural, by the way. Right? This is structural unemployment. So deep in the weeds of, economics, your economics textbooks are going to be these ideas of what type of unemployment is. It says frictional unemployment, where someone's just job hunting, job hopping. There is, this cyclical, which means the normal cycle of GDP up and down leading to layoffs or not. And then there's structural unemployment, which is, look, something fundamentally different has changed. And as a result, there's going to be unemployment, and this going to be more permanent in nature. And that is the nature here. That is the nature here. I don't think that's going away. I don't think that's going away. D.O.G.E just happens to be the example that's getting the headlines. Nevertheless, the fact is that, for example, AI is going to create structural unemployment in basically every industry other than ones where you actually have to execute something hands-on. I went to my dentist. I said, "You're safe." He's safe, right? He has to be there physically in order to have this wonderful sounding drill going into my mouth. Okay, he's safe. That said, other administrative tasks, all the way down to software programming, certainly under challenge. What I'm talking about here is what you need to address to today, and this really is what benefits. What benefits do you retain? Now, the retirement benefits for those people who are permanent employees and, for example, went into what the federal government called the TSP, and, for example, if you work for a for-profit or a company, corporation, Meta, for example, you have a 401k. Those are safe. In other words, no one's going to take away those. That I find the lowest probability event. Okay. Almost impossible. I couldn't even name the pathway by which, because that money is in your name. Okay. So I'm not concerned there. However, every other benefit is a different matter entirely. And I'm just going to expand our agenda list here a bit. And for me, the first one is health insurance. I don't think there's any question, right? And we're simply going in priority of cost. If you're a family of 4, right, where you have 2 minor children who are under the age of 26, and you are married and you have a spouse, you have family insurance, and that health insurance, if provided by the government under the FEHB, which is the Federal Employee Health Benefits, as administered by the OPM, Office of Personnel Management, those are the acronyms of the federal government. You're talking about something on the order of $3,000 a month is the full sticker price. And this is a large amount, obviously. Undeniably the case is the fact that Cobra exists and you are protected. That doesn't mean it's best. Because under Cobra is a lot of fine print. First of all, let's just talk about the timeline. And this, I'm going to give you some insider's view when people tell me that they've been laid off, when people come to our firm at GH2 Benefits. The employer has to notify you. And you have 60 days to decide, which you should use. This is the most important thing that I'm going to tell people who are concerned about their health insurance. The employer has to tell you within 60 days. They're going to tell you how much the rate would be. Once you get that notification, then the time clock has started for you to decide within 60 days. You should not decide on day 1. The number of times you would decide on day 1 is almost 0. There are very, very few instances. I can't say exactly 0. It's never 100%, but as close to 100% as I can get. I don't suggest that anyone just says, okay, well, I'm just going to sign up for Cobra. I would look through facts, and there are many, many facts. The most important of these is the ACA and APTC. So under the Affordable Care Act, from the time that your coverage ends, okay, from the date that your coverage ends, you have this 60 days to start new insurance with this, and you should use that date. Now, it used to be you needed to decide by the 15th, the 45th day. That is no longer the case. You literally can take 59 days, and on the 59th day, you can decide Cobra or the Affordable Care Act with the APTC, which is the subsidy. Okay, this is the APTC for newcomers. That's the Advanced Premium Tax Credit. And that is what lowers health insurance premiums as well as possibly deductible. And you can see right here, I wrote this paper about the nuances of the Affordable Care Act's Advanced Premium Tax Credit and Medicare IRMA. It's going to sit in text below today's video at the end of when I'm done broadcasting. In here is an article talking about and describing exactly how the Advanced Premium Tax Credit works. The savings here are so big, possibly. And if you qualify, then what could possibly happen is, and we're going to go to this, but I have shown this website in the past, which is our portal where you can go and figure out whether or not what type of health insurance you can get. And at what price, given your size, family size, your location, and your ages. Okay, and this price comparison difference here can result in the $0 health insurance. So let's say, for example, I know I've misspelled this. Let's say, for example, your next job is far lower in income. Let's say you want to be a contractor. And your contracted rate would result in a much lower annual salary. Then you can find out and get your estimate on the ACA. Using this, the link is down there below today's video, which actually goes to so that you can get your estimate. This number here can be from that 2,800 that I said all the way down to zero. And in fact, if I were given a blank piece of paper, whenever I get told, Jay, I've been given this opportunity for voluntary early retirement, this is my first stop. As a financial planner, this is my first stop. Okay, tell me about your family. Tell me who you are. Tell me what you want, right? Two very, very simple questions. And one of the things what you want is, I want to be able to live within my means. And the high cost item that people know the least about is health insurance. And so we we address that question first. Because for some people, the answer is, I can't afford to take the voluntary retirement early because I won't get the APTC, and now I've got 2,800 times 12 of extra cost until I get to Medicare eligibility, for example. Or I'm 50, I still need to work for 15 years, and now what am I going to do? Well, maybe for some people they're worried, or for some other people they're like, okay, I can actually do this. And the reason is that they can manage this is because they can find another job, let's just say, even if it took a year, because they know that their cost here can be mitigated to such a degree. What happens here is that Because the reason I say that you use this 60 days is something that I call the look back option. Okay. Which is, let's just say if you got sick on the 55th day, you can retroactively take Cobra. So, you got your notice. The time clock started. 60 days from that day. You waited. You're not sure. You're not sure. You don't pay Cobra. On the 55th day, you got in a ski accident and you broke your leg. You can go and retroactively take Cobra, and again, I've misspelled, mistyped, I should say. Go back to the first day of the 60 days. You've got to pay the premiums, but you're covered under Cobra from that first day. Now, you do have to pay the months prior, as if you took it right from the jump. But it's a valuable option. Because if you're Mr. Perfect, let's say you're Mr. Perfect, just waits. And in theory, until the 59th day, and then buys under the ACA. Skipping 2 months of Cobra, and also getting health insurance on the 61st day, because why? Because the ACA allowed it. And now, Mr. Perfect, a single person, has saved himself $2,000. And if happened to get the ACA, right, because he finds the plan at the right price, now you save multiple $100s for the rest of the year, and then you start over. This is the nuance here, right? These are important nuances. And the reason I'm going this slowly and spending this much time in this particular segment here is that D.O.G.E has accelerated this and brought this to today's headlines. But this happens in almost every zip code. It doesn't matter. If your employer has 20 people and you have health insurance that is employer sponsored, you have a group under the employer's group plan with 20 full-time employees at least, then therefore you have this right to Cobra. And these nuances here, as you can see, you can just go through what my example and replay it if you need to. I'm going to make a separate segment by clipping this portion out because it applies not only to federal employees, but to all sorts of different employees. Now, there are more nuances here. This is not the full story. It's just that we're running out of time for the segment, right? Because there are going to be certain exceptions where Cobra still is best. It's important to listen and keep examining beyond the hashtag, right? There's going to be some hashtag on Twitter or X or Blue Sky, which is never Cobra or something like that, or Cobra stinks, or worse than that. But you can see my point, which is that there can be special exceptions where Cobra is the efficient choice. Easy one. Employer pays. You're under Cobra, but because the employer doesn't want to pay for their other benefits, but they will pay for the health insurance portion. That's a certain example. Your household has Medicare IRMA issues. That's another one. So there can be very subtle examples and different exceptions here. For those people who need that private guidance, this is my firm, GH2 Benefits. This is where we conduct that business. info@gh2benefits.com. The email is there, underneath my picture. Video. Picture. It's not there. Info at GH2, I'm sure this is the videography department's problem. Of course, yes, you can see it here. So, the second one. What is to come here? And first for me, what we have not heard very much about is the ACA. Okay. So away from the people who are not going to be facing unemployment issues is going to be the ACA under threat. We're seeing, first let me just say that I don't think that, rolling back the ACA all the way to where individual health insurance is underwritten is in the future. I don't see that, because that basically means that the ruling party is going to be voted out of office and their clock is going to be ticking. In other words, that's a bridge too far. That said, a lot of things, however, details are probably on the block. And we saw some hint of it on Friday, which is navigators, which are not me, which are, not brokers or, health insurance advisors that are paid by carriers. We are paid a flat rate or a ridiculously low rate given its importance, which is fine. Okay, those are the rules that I'm given. I've accepted them. Navigators are unpaid. They're volunteers. They don't have the ability to give you advice. They're not licensed to do so, right? I have a license, many licenses, as well as errors and omission insurance, just in case there's human error on this end. That program was $100 million a year. It has been slashed to $10 million a year. Now, in the United States, in a country our size, $10 million is not going very far. So ACA navigation down by 90%. For me, the question under the ACA is about the advanced premium tax credit. So you can see here, and the reason that, for example, my videos don't go viral, right? And we're going to call it a pity party we're going to go to a tangent here of Jay's pity party, which is simply that the topics I'm talking about usually cross over multiple different issues, multiple silos. I've used this analogy in the past, right? YouTube is there. Social media is there to talk and to give you awareness about a particular, very specific, singular topic. That's not where the money is. The valuable money is on the nuance when things that you think are separate topics are not. Right? They're actually interacting. Sometimes they're cooperating and sometimes they're clashing. And when you don't address when they're starting to knock at each other, that's where the money is. I just showed you here. For example, even this portion here, right here, is misunderstood. Oops. That's not a good look. This part in isolation is misunderstood. Right? We've not talked about what goes into the ACA and the APGC. Well, it's taxable income. Okay, well, now you get dividends and you got capital gains. Now you've got financial planning immediately as the interaction. Let's just go back to the ACA now that I'm done with the tangent. Navigator funding is cut by 90%. The question will be the Medicaid expansion. So for newcomers here, Medicaid expansion is the advanced premium tax credit. It's unfortunately named having the stigma of the word Medicaid. People misunderstand it. People don't understand that this exists. They think, oh, well, I make too much money. We have too much net worth to qualify for Medicaid. Medicaid expansion is not the same thing as advanced premium tax credit. Not even close. As I stated, that when I told you about this paper that I wrote, which has now lost. That paper talks about something called the federal poverty level. The advanced premium tax credit has under the Inflation Reduction Act is 400% of federal poverty level. Four times the federal poverty level does not make the person poor. Right? That person would not describe themselves as being in poverty. Not even close. And yet they still get the advanced premium tax credit. So you can see what happens here is that there's this strange terminology issue. People have not applied when they should have. Overpaying, and you can see it here, not knowing about and therefore overpaying in this particular instance, under my example, $2,800 a month. A lot. It's a lot no matter what your household net worth is, right? You have $5 million, you don't want to overspend by $2,800 a month. No. The ripple effect of it, and the reason why I talk about the silos here, is that this means that it, if anything, since it's unknown, I'm about to take a sip of water, is that since it's unknown, what it has done, it is accelerated the need for a tax-efficient income plan. Right? We need to pin down. Right? You start with how much does it cost? And then, okay, how much do I have? But the issue with it is that how much it costs, how much the Affordable Care Act costs, is an income-related issue. And therefore, but that's not a cash issue. So the difference here, right, is that I could live on zero income if I've got, stacks of cash in a safe. Right? In other words, just pull out the stack of money from the safe and then use it to pay for groceries. I don't, and yet still get no income. I can, under that situation, I can get the maximum advanced premium tax credit. That is true. The problems become that people don't understand this nuance, so as a result, they take or they get more earned income, right? Taxable income, and therefore also disqualify themselves from the advanced premium tax credit, so they find they've got higher income, give it straight back in terms of higher health insurance premium. And sometimes it can be enough to be it can change your decision making entirely on many levels. So if anything here, your takeaway here from the first two segments here is that what these changes are doing here is they are increasing your need to be on top of your knowledge of what is usable cash and then tax efficient income. And the reason is to drive down your cost. I always tell people when they're considering financial planning, okay, tell me how much you need. How much cash do you need to keep the lights on at your house a year? Let's start there. Don't tell me about how much is in your 401k or in your brokerage. Tell me how much money you're going to spend. Tell me that first. Then we work backwards to connect dots. And from then we decide on what decisions to make. But we start with how much does it cost? And the feedback loop here is the fact that how much does it cost has this interaction with how much money you make. It's the it is the linchpin basically to the entirety why our clients here, right? We don't have much to prove to some of them because we've kept them so much money up front that whatever their savings and investment strategy is, that has due to variance and randomness of financial markets. What we've preserved for people is in stone, in cash, that day. The end. DOGE changing the IRA, the Inflation Reduction Act, does call this into question, but it doesn't change. All it does is it increases the importance of this element about this part that I've shaded here. It hasn't changed. It'll change in nature due to detail. Do I think that the Inflation Reduction Act is going to eliminate entirely? No, that's because you have to remember the ruling party here. That's their friend. That's their friend. That's their neighbor. That's their voter constituency who's going. So while this is certainly going to be looked at, the flip side here is that a possible political barrier, without having a crystal ball, is the fact that you may not get this rolled back because this can get you voted out of office. This can get you voted out of office. The good news here is the flexibility for the people who understand what I've said here today, who reach out to us. We have receipts, right? Is that the flexibility is in the buyer's favor. If I would tell anything about health insurance that people do underestimate and gets, glossed over, is that the rules on the margin for both the ACA as well as Medicare, crazy people write 200-page books on all the nuances of Medicare, that the flexibility of choice, price point, is in the buyer's favor, not the seller. Not the seller. You know your health situation the most. Humana isn't allowed to ask, and neither is United Healthcare, despite all the fireballs that you see on social media being thrown at health insurance companies. They've got to accept you. They're going to accept the rules of application. If you qualify and if you're eligible, they've got no choice but to accept you at the single posted price, which makes it notably better than the existing other types of insurance on the planet, right? And notably here with the fires in California, the floods due to hurricane issues in Florida, we have a full-blown auto insurance, home insurance, especially homeowners insurance crisis. Don't get me wrong, by the way, if you live in a place that's not affected, your premiums are still going higher because of the way that home insurance works and auto insurance work is not as localized as health insurance. Health insurance is actually quite localized, which means from state to state, even from county to county, the premiums will change, and you can't really leak them together just because, Illinois has very, very, high medical cost rates, utilization rates, doesn't really affect the Michigan market. Not the case in home and auto. Not the case in home and auto. I'm not a P&C licensed person. I'm going to tell you anecdotally that my actuarial science, expert friends, colleagues who work in those industries tell me that these regulations and the way that they're applied is very, very different. Handcuffed is what they described under health insurance. Indeed. Okay. What's next? So generally speaking, under Jay's Corner, I don't try to pull out a crystal ball. But I think that these are fairly close, if not pre-announced. Okay, so this is not really a crystal ball exercise. Medicaid next. I don't think that there's any question. This is already in the public eye. It's being looked at. That when you roll back it's not only the Inflation Reduction Act, but also Medicaid eligibility matters. Now, for newcomers, for people who don't know who have been on Medicaid in your particular location, the thing you should know is that Medicaid is not, right, a national program. Not really, right? It is a partnership between the federal government and your state of residence. And what this implies is that every state is different. And the fact is that certain individual states are cherry picking the federal government. So you can understand why I'm not out here to say that, D.O.G.E is bad, D.O.G.E is good, D.O.G.E will save the country, D.O.G.E will ruin the country. The way I started the welcome message about, right, if you're hearing a politically tinged, biased message, that's a you issue. That's a you issue. But it is the case that, for example, if you lived in, today I'm broadcasting from Ann Arbor, Michigan. If you were a Medicare eligible person in Michigan and your cloned brother lived in Kentucky or North Carolina, your eligibility, your benefits will look entirely different. Wildly different. If you lived in a nursing home and you were there under Medicaid in one state, the ramifications financially to your household or to your estate can be different from state to state. Even if you so for example, in certain locations, you have estate planning where attorneys are erecting legal documents, creating legal structures to try to shield assets. That may work or not in state 1. It doesn't work at all in state 5. It goes to show you that the rules of Medicaid and the eligibility are a state-specific matter. And that is, I'm not going to settle what is fair and what is right and what is wrong. What I am going to say, though, is that as a result of looking at the eligibility, and just this morning, literally, there was a statement that something like 7,000 being let go from DHHS, from Health and Human Services. That anecdotally, and people who know someone on Medicaid will certainly confirm this, which is that Medicare administration error rates are really high, right? Because of this very complicated combination of state and federal, partnership, that what happens is that at the individual level, you're dealing with your state in order to determine your eligibility. And so let's just say, for example, there's a caseworker. The caseworker has a bad day. The caseworker gets laid off because the funding from the federal government has declined. The number of different errors, even when perfect, is high. So when you throw in an extra complication to D.O.G.E arriving, right, and Medicaid being next, and then Medicaid expansion on top, so now what you've got is this lower funding error almost certainly means more error. Now, the reason for this here, that for me bringing up this as a segment here, is that your bottom line is here. I'm going to give you a stunning statistic in a moment, which is you need to keep them on top of your eligibility. If you're not a person on Medicaid, you may think this doesn't affect you. I promise you that for the vast majority of the overall country, that The idea that you know zero people on Medicaid